What up, Hyperchange? Welcome to another episode. Today I'm going to walk you guys through my operating model of Tesla's financials through 2024. Been working on the spreadsheet for the past few days. It kind of outlines my entire thesis and the way I think the company is going to evolve through the next few years, from selling cars to going to a network operator with the Tesla network, and how this is going to transform the business model. I want to point out that take this model with a grain of salt. It's going to be wrong. It's impossible to predict financials this far down the road. It's also important to note that I think you got to put pen to paper, because when you have a model like this and you're investing in a company that's growing for the long term and you're thinking about valuing the company based on what it's going to be in 5 or 10 years, not what it's going to be today, it's important to figure out what that really looks like in 5 to 10 years, map out the steps for them to get there, and figure out if they're on the right track or not to actually fulfilling those goals and meeting your expectations. Without further ado, let's get right into the Tesla financials and get our hands dirty. Okay, welcome to Excel spreadsheet world. All of these numbers are my guesses and assumptions and estimates. They are probably going to be totally wrong, so I want to make that very clear from the get-go. But this is my best job of trying to predict in a semi-conservative fashion what I think is going to happen to Tesla's financials. Revenue last year was about $7 billion. I think that's going to scale 66% this year to $11.64 billion. We're looking at minor growth from the Model S from $3.4 billion to $4.1. Then we have a little bit of growth from the Model X too. They actually had some production issues in 2016, so that is why we're seeing such strong growth this year. And then, of course, we have that little bit of Model 3 revenue this year as they get the initial deliveries going. Now, quickly, I'm going to switch pages to the auto and truck business, where I go into the assumptions of how many units that each one of these are selling. Model S sales, I'm expecting to be 45,000, and this is just outright. So these are not including leased cars. That's why it looks a little bit lower than Tesla's normal deliveries. I broke it out here where we have cars sold outright, and then we have leasing revenue. And I just kind of assumed that Tesla's leasing revenue had been about 13% of total auto sales historically, and I think that's going to grow as a portion of total auto sales as the Model 3 is cheaper, and so people are more likely to lease. And as you can see, 2017, it's 15% of automotive revenue, 17%, 19%. We saw about 800,000 in leasing revenue last year, scaling to 1.2 billion this year. 2018 is going to be about 3.6 billion. This is on the back of those Model 3 leases. So this is just kind of a rough estimate of how I wanted to break it down between leasing and outright sales. Anyway, let's get into the fun stuff. Model 3 units, I'm only expecting 5,000 cars to be delivered in 2017. This is way below my prior estimates, about 25,000, based on the company's rumored production bottlenecks, shortfalls. I want to be conservative, only project they're going to be able to sell 5,000 cars this year. The average price is going to be about 55,000. That's going to lead them to about 275 million in revenue. Here are the assumptions for the Model S: 45,000 cars sold outright, average car selling price of 90,000. That's going to be about 4 million in revenue. Same for Model X here. So just really simply wanted to kind of put pen to paper here. How many cars they sell, what's the average selling price, how much revenue does that generate? Moving to 2018, you'll see that I only expect Model 3 sales of 250,000 units. This is way below what Tesla's saying they're going to do. I'm only saying they're going to sell about 339,000 cars outright. If you include another 10 to 15 or 17% of those as leased vehicles, we're only looking at about 380,000 cars delivered in 2018. That is below Tesla's guidance of 500,000 cars. Just because I want to be more realistic here, we know that Tesla can be a little bit rosy with its forecasts. Even in 2019, I only have them scaling to about to outright unit sales of 493,000 cars, with 19% of those additionally leased. So we're looking at maybe 550, 600,000 total car sales in 2019. What does that do to revenue, profitability? Well, this is where it gets really fun for Tesla, because even though gross margin I'm projecting is going to get slammed in 2017 because they're growing Model 3s, this is something management's guided. Gross margin is going to be hit pretty significantly in the back half this year, so I'm expecting that. I'm expecting the total gross margin for all of the auto business to be just 12%, but then I think that'll normalize to 25% in 2018 and 19 as they really figure out Model 3 production. Service revenue, I made a really simple assumption here that it was about 9% of automotive revenue. This is consistent with what it's been historically, and as Tesla said, they never want to make a profit on service, so I just assumed that the gross margin would be 0% on that. Now energy revenue. This is something that I was trying to be very, very conservative with, because I just don't know about the growth rate. They only did did 200,000 in energy revenue last year, and that was because they only acquired SolarCity really late in the year, so we only saw a really tiny contribution from them. This is 2017 is the first full year with SolarCity. It looks like they're on pace. This is based on the first half of the year's revenue. I kind of extrapolated that they're about to do 1.05 billion. Battery revenue is only going to be about 150 million, and then for the growth rates on those, I just plugged in, used really simple numbers, but I think this is important to note because as you'll see, over time, I really have the energy business growing at a pretty slow rate here, and this is something that Elon Musk has actually guided against. He's saying we should be seeing a dramatic ramp in battery and solar revenue in actually the late half of this year and especially into next year as they get the solar roof going. So we haven't seen that yet, but that's why I want to take a really conservative approach with my energy numbers and projections here. My energy gross margin. Tesla has posted an energy gross margin of 29% this year. I'm only assuming 25% because I just wanted to be conservative, and that is what it is. Now with SG&A and R&D, I looked at what they were doing the first half of 2017, extrapolated that, tried to be generous, giving them room to grow that pretty significantly, and then I kind of made a really simple estimate of this is how fast they're going to grow their SG&A, and then this is how fast they're going to grow their R&D throughout 2024. As you can see, I have R&D growing faster than the SG&A because I think they're going to be investing heavily in building out new product lines, researching new technologies, and that is going to overwhelm the pace of growth of building out their store infrastructure, where I think a lot of the heavy lifting is already done. It's important to note Tesla already has about 300 stores in its total network. Apple only has about 450 total worldwide. I don't think they need to really expand their store base dramatically, maybe just staff them with more personnel, but really R&D is the bulk of the investment going forward. Who knows if that's right? Yeah, so that's kind of the basic end of the model. Now let's blow this thing out all the way to 2024 to really give you guys a scope of what is happening here. As you can see, Tesla's Model 3 sales continue to ramp into 2020. I have Model 3 unit sales peaking at about 500,000 cars. Now, I think this is pretty low given the company's rumors and plans to, Elon Musk said on a bond call with investors just a couple months ago, he thinks global demand for Model 3s could exceed 700,000 cars annually. I kind of believe that, but I wanted to be conservative once again. So let's just say they peak sales at 500,000 Model 3s. Then the Model Y comes online in 2020 with a very low production at the end of the year, ramping up to about 500,000 cars by 2022 with about the same market demand and the same average selling price as the Model 3. Therefore, we're seeing about equal revenue from the Model 3 and Model Y programs. Now, this is the most important part of the model, and this was the trickiest thing that I had to estimate was when does Tesla network really take off? When do we see the transition from selling cars outright to operating an Uber-like autonomous robot taxi service? My assumption is that Tesla launches the Tesla network here in the year 2021. And they only drive 500 million miles. This is a super beta test program, and their gross margin is pretty low here at 50% because they're still testing it out. Then they really start to scale with 10 billion miles driven in 2022, going up 10x to 100 billion miles in 2024. ARC Research, the report that I'm going to link to in this, they estimate that in the first year of a successful ride-sharing mobility service like the Tesla network, there could be demand for over 100 billion miles driven. So I kind of wanted to just assume that Tesla would scale to that slowly, and that in 2024, they would be able to do at that run rate. And although it sounds like a ton of miles, 100 billion miles, it's really not that much. US consumers in 2016, and this is just the US, drove 3.22 million miles. So this is equivalent to just about 3% of the entire miles driven of the entire US population. And remember, Tesla's not just launching the network in the US, they're gonna launch this globally. So I'm only assuming like a couple, maybe like less than 1% of global road transportation of the market size today happens on the Tesla network. In terms of revenue per mile, I assume that Tesla would be capturing 10 cents in revenue per mile. This was a really, really rough estimate. And I have more Nordson assumptions here. I'm going to link to this spreadsheet so you guys will be able to walk through it all yourself, spend as much time as you want with it. Tesla will be able to capture about 10 cents in revenue per mile for the Tesla network, assuming the cost is 50 cents a mile for the car owner to rent it out, and the cost to consumer is $1 a mile. You're paying several dollars a mile for Uber now. So this is about I'm assuming the Tesla network costs about 30% of what a Lyft or Uber will cost. Tesla will take a 20% cut of the gross profits. 20% of 50 cents is 10 cents, and that is how I get Tesla doing about 10 cents per mile in network revenue. Now, if you multiply the revenue per mile times the amount of miles, you get to the network revenue. This is in millions. So they're only doing 50 million in 2021, quickly scaling to 10 billion in revenue at a 90% profit margin in 2024. That sounds astronomical, but the reasoning behind this is because Tesla's going to have almost no operating costs. It's all software. They're not actually doing anything. There's no physical infrastructure. This is super high margin. So even though, we're seeing the Model Y do 25 billion in revenue in 2024 and Tesla Network only doing 10 billion, Tesla Network is going to be generating so much more profit for the company because it's such more high margin revenue. Now let's run to the operating model to really see how this plays out. And I've separated here how you can see the gross margin of the Tesla network versus the gross margin of outright sales. Oh, one quick thing to know. I project a dip in outright sales gross margin in the year 2020 because Model Y will be ramping, and like the Model 3 ramp, that's going to impact gross margin in the near term, but eventually that'll normalize to that 25% number. And then I have leasing gross margins stay pretty consistent at 30%. And then here you can see the Tesla network gross margin ramping significantly. And now if we'll go to this, you'll see that auto revenue here is actually peaking out in 2023 and then goes down in 2024. And that's because of this trend where people are buying less cars. I actually have peak demand in 2024. I have people buying less cars. Model Y sales will go down from 500,000 to 450,000. Same with Model 3 sales. Model X and Model S sales will start peaking and be capped at what they are in 2023 because I think luxury cars will be less susceptible to this ride sharing trend, at least in the beginning. You're going to see Tesla's car business start to shrink when their network business takes off. And that is going to change the entire fundamental margin structure of the company because as you can see, the revenue from the automotive business, which was in the mid 20%, as the Tesla network starts to grow, goes up significantly. And even as a blended number, I'm expecting it to be over 30% in 2024. The Tesla network is going to be a lot lower revenue, but significantly higher profits. The other thing I wanted to point out is I didn't include any revenue or any financials from the Tesla Freight Network or the Tesla semi-truck. This is something that I think is going to be really exciting and has the potential to really move the needle for the company, but we're not getting details until November. Who knows what the business model is going to be? Are they going to be renting out on a per mile basis? Are they going to be selling the trucks? I just didn't know. I was going to try and model it out, but I just didn't want to include it, and I want to simplify it, so that's why that's not in there. Now let's get to the bottom here to really get into the profitability of the company. As you can see, I think Tesla will actually make a tiny profit just based on the fact that, their expenses are going to grow linearly while their revenue is growing exponentially here. That's because they don't need to build new stores. All their infrastructure is already built out. This is when we're going to start to see a really fun unit economics of Tesla's business model and why I'm kind of so stoked here to see Model 3s really hit scale production because I think once that happens, Tesla is going to go to really start making money. But then I think it's going to be important to note that they're going to start losing money again in the mid-2020s as they invest in Model Y, and that decreases gross margins while their expenses are still growing linearly. But I don't think that's too big of a deal. After that, in the early 2020s, I project Tesla revenue really starts to drop to the bottom line. And like I said, even though this revenue number peaks out in 2023 at 97 billion, the gross profit continues to climb. And that's really important to know. And that's because, once again, we have the higher margin Tesla network revenue. And eventually, this scales Tesla's core operating margin to over 10%, driving operating income of nearly $10 billion in 2024. That would be operating earnings of about $47 per share. Quick note on the share count. I've assumed that Tesla is going to increase their share count by about 5 million every year. This is more than I think they actually will, but it's to account for dilution in a major recession. Let's say Tesla has to sell 5 million shares out of nowhere in a recession to raise $1 billion to fund the company. I wanted to price that in, and that's why I'm kind of assuming a pretty significant amount of consistent dilution here because there will probably be a recession. Tesla will probably have to dilute, and so I wanted to bake that in. So I don't know if this was helpful. I'm going to link to this. You guys can check it all out, go deep into it here, and really let me know what you think because I'm really curious about learning more from you guys. And now, I know this has been kind of boring or tricky to understand, so I put it all into pictures. This is what Tesla's doing today. As I said before, I think they're going to start losing significant amounts of money in the second half of this year. That's going to drive negative operating income of negative $2.3 billion, despite seeing that big jump in revenue. But next year, things start to get really fun because the Model 3 hits scale. They're building it a lot more profitably. We start to actually see operating income of $800 million. Maybe this won't happen because Tesla, they're trying to go for the Amazon model here. They may just come out with something new to spend the money on. If they're making any money, they're likely to plow that back into things like building out the Semi, to investing more R&D into the Tesla networks. And I don't really want Tesla to make profits now. I want them to capture as big of a growth opportunity as possible, and that's kind of how I'm framing my thesis of the company. Here we go. This is the big shabam. Like everything in my financial model that you just looked at in the spreadsheet is all kind of charted out here. We are right there, 2017, the very start of Tesla's mega growth curve, revenue going from just over 10 billion to over 90 billion in a 6-year period. Just absurd growth is ahead for Tesla based on the fact they're coming out with cheaper cars, they're expanding their lineup, they're expanding their reach globally, the energy business is going to be growing. There's just so many growth drivers. This is really what I think Tesla can do, and once again, I may even think this could be conservative based on my Model 3 unit sales and low revenue from the energy business. We're just going to see a massive uptrend in Tesla's revenue for the next 6 years. Then it's going to start to flatline. And remember, this is all dependent on when the Tesla network takes off. If the Tesla network takes off in 2021, we could see car sales start stalling then. If the Tesla network doesn't take off till 2030, Tesla's core auto business will scale just selling cars like it has been today till 2030, and then we'll see the Tesla network. But it's so important to predict this fundamental shift in Tesla's revenue because it's going to totally transform the business model. So I tried. And as you can see, even when the shift hits and revenue starts to decline, gross profit will continue in the uptrend because Tesla network revenue is so much more high margin. That is going to drive profitability and growth in earnings for the company as a whole if they choose to stop reinvesting in new projects. If that happens, who knows? I do think they will be able to generate cash if they want to at that scale in the early 2020s. My kind of ballpark estimate was that in 2024, they could do 10 billion in operating income, and this would be enough to justify a valuation of about 300 billion. Maybe not. This is kind of make it easier for you to visualize. As you can see, the automotive business is driving the bulk of the growth. I think I'm being conservative with energy. As you can see, it's only a tiny green sliver on top of the red stuff. And then we have the revenue from Tesla Networks, which is the yellow, which really starts to expand in 2024. I could have kept this going and you would have seen, declining auto revenue, network revenue get way bigger, the profitability of the company go up. You guys get the gist here. There's at some point, this transition is going to happen where the core business declines and networks take off. This is my core summing up everything. I think that Tesla in 2024 can be worth 300 billion. This is a 30 times multiple on the 10 billion in operating income that I think they can generate. Why do I think they deserve a 30 times price EBIT multiple? That's really expensive. Yes, but this is a company that's still going to be growing significantly and really rapidly in 2024 based on my assumptions. The mobility as a service, robot taxi platform initiative will still be in its infancy. Remember, I still think they're going to be working on the autonomous freight network, but I didn't model any of that in. I just still think they'll be a growth company, and so I think that's one thing to look at. But if they're not, I think they would actually be even more profitable than 10 billion. Another fascinating way to look at the company is their gross profit. Tesla, I'm expecting, let's run back to the Excel model really quick. I'm expecting Tesla's gross profit to climb pretty consistently and hit 29.6 billion, about 30 billion in 2024. This is a really important number because if the company's not intentionally dropping all of its money to the bottom line in operating income because they're investing a ton of money in R&D and growing out their sales, they're not being as profitable as they want to, so the earnings can be a little bit lower and misleading. And that's why valuing the company on a price to gross profit basis when they're at this phase and still growing quickly and intentionally not dropping everything to the bottom line could actually be more effective. And in that case, I would argue that Tesla, look at Amazon, look at Apple, look at Facebook. These companies trade about 8 to 20 times price gross profit depending on their growth. Given I think Tesla's gross profit could be growing at about 10 to 20% during that period still, maybe 20, 25% even, they can easily justify a 10 times gross profit ratio. 10 times 30 billion is 300 billion. And that is how I get to the number here, where in 2024, my rough estimate of Tesla's market cap, based on all the assumptions I have, is that they could be worth 300 billion. If we use my share count of 210 million shares to get to that 300 billion number, the share price would be $1,429. So in 7 years, based on my financials, and if the market chooses to value it how I think the company should be valued, then I see the company's share price going from $350 to $1,429. That's a compounded annual growth rate of 22%. That's a really attractive return. That's why I'm still a shareholder. But this is all back of the napkin stuff. It's super rough estimate. It is what it is. That sums up my walkthrough of Tesla's financial operating model. This was kind of a new video for me to make. And remember, this is a super rough, this is more of an art than a science. These numbers are going to be totally wrong, but I just think it's super important to put pen to paper and try and really figure out what is this going to look like? How does the business model unfold? How much cash does it generate based on these assumptions? And then figure out if Tesla's following those assumptions. So that's why I want to, I'm going to keep updating this model. I'm going to keep making videos to share with you guys about how it's doing, how I'm changing it, how that changes my perception of the company and how it's valued. Bottom line and the gist is Tesla, I never want to see Tesla make a profit today. And in general, I don't think Tesla will ever make a true significant profit to justify its valuation based on selling cars directly. That's not the end goal here. The end goal is to really have an autonomous taxi service, and that is a big enough market disruptor and has big enough potential to drive a huge valuation for the company. And I think everything is really a stepping stone to get to that model. That is why you're going to see the company investing heavily. It's just a fascinating company. They're growing so much faster than everybody else. They have so much in the works. There's energy, there's the truck business, which I barely even scratched the surface on. I was working on this model for like 4 days. I kept tweaking it. My head almost hurts from it. I don't know. I wanted to put pen to paper and make this video to show you that you gotta do this. And if you're not like pushing your limits and really thinking about the valuation of the company, then I think it's hard to wrap your head around it. You can read models that analysts put out. You can, read articles about the PE ratio but none of that is going to give you a better understanding than building an Excel spreadsheet or a Google Doc, that's what I did, from the ground up, putting in the revenue numbers, really forcing yourself to make the assumptions and thinking about what goes into those assumptions, and then putting all that together and saying like, okay, they could generate enough profit to justify the value, or maybe they can't. And then I think that's where learning happens. Tesla's one of the most difficult companies that I've ever tried to model in the history of ever, because they're transitioning from selling cars, which is a business that we haven't even really seen fully evolve, into the Tesla network operating these freight and taxi services driven with self-driving cars. That is a business model we've never ever seen exist before, let alone have had financials to analyze. And then on top of that, we're trying to predict, when government regulations will happen to allow Tesla to be able to do all this. Is it going to be in 2023 when the Tesla network takes off, like I assume? Or will it be in 2027? Will it be in 2020? It's just who the hell knows? One last thing. We are in a super low interest rate environment. This is perhaps never existed before. I've only been investing for about 10 years. And so I lived the Great Recession. Sure, I was super young. I don't remember much about it. I don't really remember companies' valuations before it. But I do know right now that Amazon is never generating profits. And this is a model that is leaking into other aspects of the market. Tesla being the most prime example of a company that is following that model where there's vision and growth over near-term profitability. And this is something that only works in a zero interest rate environment. The Fed is raising rates. If the benchmark interest rate, which has been at 0% for 8 years, that's unprecedented. If that changes, the entire structural dynamics of the market could change. I don't know if people are going to continue buying into these vision stories. And if that happens, then we would see a total crumbling of Amazon share price, of Tesla share price, and just an entire re-rating, because the market's going to go flipping from growth and vision to where are the near-term profits. And I don't think that will happen necessarily, but I think it's really fascinating to note that on a much broader scale, taking a step back, Tesla is a transformatively new business model where they're not trying to make money now. It's all a stepping stone to a business model that's 5 years in the future. This is just so far out, and I don't know if it's because of a low interest rate scenario that the market's allowing this, or is it a new norm of hyper change where companies are more disruptive than ever and the opportunities to capitalize on that disruption are so massive that it makes sense fiscally from a discounted cash flow basis to actually invest everything you possibly can up front, screw near-term profits, because the prize at the end is so much bigger. I think that's true, and I think it makes sense, especially in Tesla's case, especially in Amazon's case, but who knows if this is a fundamental, kind of leeway that the market will continue to give these companies. Anyway, that is Hyperchange. Love to know what you guys think. Talk to you guys next time. Peace!